Good morning from Los Angeles. It's Friday. It's Power Hour. Welcome to Power Hour. Every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Hope you all had a great week. We're going to talk about a few subjects, but more importantly, um, we're talking about the markets. There are a lot of setups that I'm kind of trading, interested in. I'll share those with you. I'll share the position screen with you. And as usual, it's an interactive session. So I'm going to post the link for the StreamYard shortly, once I'm done with a few topics I want to talk about. In order to do that, I have to go to Twitter. So on Twitter, I follow, well, before we get into that, so we had a Fed meeting this week, right, on Wednesday. They kept the rates unchanged. Fed is on a watch and react mode. Are they going to be behind the curve again, like they were behind the curve raising rates when all the money was being pumped into the economy? And it definitely brought inflation, and we've been dealing with it. Inflation did not go anywhere yet. So Fed has a mandate. The mandate is 2% unemployment. 2% inflation, full employment. We have the full employment, but we're not getting the 2% inflation yet. It's pretty sticky, actually. And Fed is saying that with the tariffs, short term specifically, we don't know what's going to happen to inflation. If inflation comes back, it's not proper to cut rates. On the other hand, the Trump administration is pounding the drum saying Powell is stupid. They need to cut rates. I disagree with the administration on this one. You cannot cut rates now because the economy is still hanging in there, although there are a lot of signs of weakness from credit card debt, from auto loan defaults, some mortgage defaults that we're seeing already. The economy is definitely slowing down, but the stock market doesn't care. So stock market is exactly almost to where it was on Liberation Day, April 2nd. So we had a whoosh, as I call it. We had a whoosh down from 6,100 and change to down to 4,800, which was pretty swift, pretty quick, reminding you all that stocks walk up the stairs and they take the express elevator down, and they all did take the express elevator down, but the bounce has been fantastic, specifically in certain names such as, Robinhoods and Palantirs and things like that. But we'll talk about those individual issues later. So there was also news on the tariffs. Obviously, the T word is the most fashionable word in 2025. Markets are swinging wildly with every tweet coming out of the White House. Supposedly, we're talking to China now. Yesterday, there was a big announcement. That's when the markets pumped in. But what I'm seeing is markets, participants are fading all this good news at the moment. Because we are back to where we were price-wise anyway. Now the macroeconomy has to take hold of the markets as opposed to tariffs, because I think that's just, it's long in the tooth. And we're going to wait and see what the effects of the tariffs. There's a lag in here for sure. The lag is about a quarter probably. We already hit our first negative GDP, but that was because of the tariffs, because of all the companies, rushing and bringing all the goods in. Look, unquestionably, there's going to be some sort of effect of the tariffs, short term and long term. It's swinging the markets wildly short term, but markets, most average Americans do not participate in the markets, okay? Over 50% of Americans do not have stocks. Obviously, a lot of you have it in your retirement accounts, 401ks, IRAs, pension plans, things like that. But over long periods of time, as we know, the power of the DCA, dollar cost averaging, works. It's unquestionable, undeniable, okay? But short term, we're getting these wild swings. Volatility has definitely picked up in 2025. If I was right about anything regarding my prognostication of 2025, is increased volatility. Okay, and we're certainly getting that. Now we're kind of grinding higher. We're back to 5,700 range on the S&P 500. Still down about only 5% from all-time highs. So as the headline of the live stream or power hour today indicated, are we walking back towards all-time highs? Is all the coast clear, right? Or are we going to have another rug pull? I really don't know. I trade what's in front of me. But more importantly than anything else, all this will go away. Time will heal all this. The important thing is the economy. Stupid. What is going to happen to the economy? Are the tariffs going to hurt the economy long term? Was the economy already slowing down? Have we been in a rolling recession already for the past couple of years? To me, it feels like it. To the average American, it feels like it. With increased inflation, which is a tax on our pockets. So market has not priced in anything regarding the macro yet, right? S&P 500 is still selling at a very high multiple. The only reason S&P 500 multiple deserves this type of high number is if interest rates were going down. Well, interest rates are not going down. Interest rates are actually going up. The bond market is not buying any of this. The gold market is not buying any of this. Gold is swinging wildly too now. It's about $100 up, $100 down every day. It hit almost 3,500. Bitcoin is rallying now on top of everything else. Okay. Bitcoin is about 103, 104. So there is a lot of mixed signals, but then I think things are exactly priced where they should be. The only thing that's not getting priced in as far as the stock market is concerned is a recession, which the odds of the recession are going up, I guess, but market's not even pricing in a slowdown yet, right? Ignoring all the signs, ignoring the bond market. Bond market rates are on the 10-year, we're about 425. On the 20-year, we're over 450. Bond market rates are where they were back in 2002, actually. So 2003. And will the bond market dictate? Are stocks going to pay attention to the bond market at some point? They used to. There used to be a very high correlation between the interest rates and the stock market. Because on a bond market, you have free, well, supposedly risk-free, right? U.S. government bonds. If you put your money in there, supposedly is risk-free, and you're supposed to get your money back in 5 years, 10 years, whatever duration you buy. The other problem with the bond market ignoring what the Trump administration would like, which is lower interest rates, which I don't think are going to happen yet. I think the bond market's waiting for macro signals, economic signals, or the economy to get weaker, and then we'll see a move lower in interest rates. But at the moment, they're resisting. They're staying high because they're forecasting higher inflation. And they're not, economy is doing well, like Jay Powell said on Wednesday. And, the lower interest rates are not there. Few other things that we need to talk about. So I follow the Coinbase letter religiously on Twitter. I'm on Twitter. It's in the show notes. If you're interested to follow me, go ahead and do that. The Coinbase letter I follow because they make things short and sweet, and then it's very understandable. So I've been looking at the M2 money supply growth and the Federal Reserve's balance sheet. It's been declining for the past about, I would say, year and a half or so. So during the pandemic, we pumped $7 trillion into the economy. Now we're taking that back out. The Fed is lowering the balance sheet. First of all, Fed is not even supposed to have a balance sheet or supposed to increase the balance sheet, but to save the economy, they came and did what they're supposed to do, like they did in 2008, great financial crisis. They created TARP, which stands for Toxic Assets Repurchase Program. And during the pandemic, obviously, printed $7-8 trillion, pumped it in the economy because we were going into the abyss. Well, now Fed is lowering the balance sheet. It has come down from about $9 trillion down to 6.7 trillion. Every time that happens, every time money is taken out of circulation, what happens is that you see the effects of it in the stock market. Okay, so there's a really, really strong correlation between what happens to M2 in this country and globally, and hard assets such as gold, such as Bitcoin, such as stock market. Well, Fed is lowering the balance sheet, and all the hard assets still keep going higher, right? Gold is making all-time new highs. Stock market is pretty close to an all-time new high. We know what happened in 2023, 2024. So that correlation is also kind of broken at the moment. So it really, really is difficult to read all this and make sense out of it. But then, look, trading is trading, investing is investing. All I can say is, please have 2 separate accounts for yourself outside your retirement, outside your 401k, outside your Roth IRA. What you need to do is if you're going to trade these markets, as volatile as they are, yes, there are opportunities, but also commingling your long-term investment portfolio with trading is not a good idea for me. So that's why I had an investment account, separate one, and which I purchased a bunch of things on this pullback, because long-term, I think things work out always. You have to be bullish on America. I mean, this is the top of the food chain here. So, a lot of people complain about America, saying that, oh, it's this, oh, it's that. Well, all you need to do is get out there and travel and see what the rest of the world is looking like. I wouldn't be complaining if I was any of you. I see a lot of complainers on Twitter. Oh, U.S. is like this, U.S. is like that. U.S. is the best of the best. There is no liquidity is the best, and the brains are the best. The market is the best. Everything is we have the best of everything here. So you need to travel and understand. Even if you go to Europe, nothing close to the U.S. But the point I'm trying to make is have 2 separate accounts. Have a trading account that you can F around with, no problem. Enjoy yourself. Buy some ZeroDTS, do whatever you need to do. Swing some options, buy some stocks, sell some stocks, day trade, do whatever you need to do. But with your investment account, pick 5, 6 different stocks and stick to them. So last year, a year before I started the channel, I had bought 4 stocks. It was Carvana, Kava, Palantir, and Palantir I sold after 100%, and it watched it go up another 400%. But Kava, I was able to stick in there, and from about mid-30s all the way to about 150 range in about a year and 6 months. And then now I'm getting back into Kava. On this pullback, I was lucky enough to get into Kava at about 82, 83. I think it's about 95. I like the company. I'm going to hold it. I got into Nike. I got into Unity Software. So basically, I got into things that I wanted to own long-term. And on this pullback, I had a chance to do so. And I deployed about 30, 35%. I bought Google at 142, 143. I think Waymo is going to be amazing going forward the next decade or so on Google. So my point, again, is this. Yes, we can trade options. We can trade weeklies, dailies, whatever. But the important thing is for us to have a long-term portfolio that we can grow. Okay. And so please do that. Don't mix business with pleasure, as they say. Pleasure being the trading part of your life. I do actively trade, okay? And so I've been looking into ZeroDTS and things like that, because for all of you who may be interested in supporting the channel, if you want to become a member, please do so. Go to the channel, click join. It's $9.99 a month. You get my trades live on a Telegram chat group. But more importantly, on this channel, my goal is to teach and educate and inform. And I'm pretty sure the member group is pretty happy about what they're learning. Not every one of my trades is profitable, and it can't be. If somebody says they're always buying the lows, selling the highs, run the other direction, because it's not true. So if you do choose to become a member, support the channel that way, great. You email me, Sergio@sergioavedian.com. I will send you the link of the Telegram chat group. It's been growing. I appreciate the support. And if you choose to do so, go ahead and do so. One thing I've been looking at, So my goal is always to add tools to my toolbox, personal toolbox. And my goal with the members group is to add tools to their toolbox. Now, it's a difficult thing to do. You know, they've been doing the same thing probably for a while, and it's basics of trading, but then now they're being introduced into a lot more complicated stuff, complex strategies. And it's not to be done, right? It's just to learn, because there is a strategy for each occasion in our markets. When the markets are going down, do you know how to short stocks? Do you know how to buy puts? Do you know how to buy put debit spreads? Do you know how to sell calls? Do you know all this stuff, right? There's many, many different ways to skin a cat. I like cats. I have nothing against cats. That's the saying it goes. Because I don't want to get canceled by some cat lover. So the point is, I'm trying to not give you a fish, okay? Even if you become a member and become part of the Telegram chat group, yes, I do put those. Yes, that's giving you the fish, but the fish could be stinky. I mean, I've had a couple of bad trades and members suffered with it, but we also had some really good trades. So the point is, I'm trying to teach you how to fish. I'm not trying to give you the fish. Once you learn how to fish, you can fly on your own, and you can be an asset to the member group, because new members actually that have joined, not only they're learning, but they're putting up their trades and we're communicating. And more importantly, members get a live stream every Wednesday. Members only live stream. The only people that can watch that are members. So personally speaking, I'm adding tools to my own toolbox after 30 years of doing this. What are they? There's something called ZeroDTS, as we all know, zero data expiration options. So I'm looking at this tweet from the Coinbase letter. Okay, I'm going to read it word for word, so look down for a minute. Apologies. Coinbase letter 17 hours ago tweeted this. It says, risk appetite is skyrocketing. ZeroDT options volume reflected, you guys are ready for this, 67% of total option volume on Tuesday. Think about it, people. 67% of all options traded on the exchanges was ZeroDTs on Tuesday. Unbelievable. Over the last 3 years, the volume share of these risky trading instruments has more than doubled. I look at ZeroDTs as lottery tickets that you can buy every day, that you're either going to get rich or poor. And the odds of hitting a lottery, as you may know, the actual lottery, let's say I'm in California, to hit the California lottery, I think is 1 in like 160 million or some ridiculous number. I probably have better chance to get hit by lightning twice before I win the lottery in California. So these are typed out, but then sometimes it works. So what I'm doing with that is I'm educating myself on how to become more proficient in trading ZeroDTs. Not that I'm a day trader, but so even at this stage of my career or life, I'm trying to acquire tools that I may need one day, okay, and put them in my toolbox. And in general, I'm trying to teach that. So let's continue with the ZeroDTs. In Q1 2025, are you guys ready for this? The average daily trading volume, this is daily, ZeroDT options exceeded 2 million contracts. So you guys must understand, this is times 100, right? Each contract is 100, unless you're doing the minis. But on SPX and all the other indexes and the cash indexes, the SPY, the triple Q, and the stocks, Teslas and Googles, and in fact, on the members live, I explained what happened to Google on Wednesday, I think it was, when the stock went from 162 to 147, and how those hundreds of thousands of ZeroDTs traded on that. And so it exceeded 2 million contracts for the first time in industry. By comparison, in Q1 2022, are you guys ready? Average daily trading was 0.4 million contracts, so 5 times less. Risk appetite is going through the roof, and people are gambling with these things. And sometimes you can hit the lotto, sometimes not. I did one yesterday with a couple of lots, and it was like $600 in, I think it was 6 minutes, 7 minutes, and I was happy with it. But I'm learning, so I will introduce my members to the ZeroDT world as well. Another thing that caught my eye that Coinbase letter put up is, so we had this huge pullback, right? And I had done a video about this 3 months ago. I said the only saving grace to this market going down or stopping from going down will be $7.5 trillion sitting in money markets. And it's true, retail has been buying while institutions have been selling during all this pullback, and retail is winning. So that was one. But second one is stock buybacks issued by companies, right? Legal, obviously. U.S. companies announced 233 billion in buybacks in April, okay, compared to 39 billion last year. So think about that, right? So those are companies. When you're running a company, right? You're the CFO or whatever you are, and you see your stock, for example, in the case of Robinhood, or in the case of Palantir. I don't know if Palantir has a buyback, but I know Uber has a buyback. Okay, so Uber was $80, dropped to 60 during the elevator down session. They have $7 billion buyback, so they're buying the shares back of their own company because they think it's cheap, right? And so a lot of buybacks also happen and saved the market actually from going into the abyss. And going with the individual investors, they have been net buyers of equities for 21 consecutive weeks. So retail is buying every single dip still. Dips are still being bought. Well, sure enough, what happened? We dipped 4,800. Now we're at 5,700. That's about 20%. So, that's why I talk about dollar cost average and all that good stuff, right? And so what else? What else is Coinbase Letter saying? Well, let's talk a little bit about Bitcoin, and let's talk a little bit about what's going on there. So Bitcoin actually, on this pullback from 6,100 to 4,800 in the SPX, showed its true colors. If I had asked you a month before this sell-off, where is Bitcoin going to be? And by the way, when that sell-off happened, Bitcoin was about 82,000. Where is Bitcoin going to be if the market SPX drops from, or risk off was the deal, right? Risky assets were being sold, such as Max 7s and things like that, or the stock market in general. If I had asked you, Bitcoin is going to go, where's Bitcoin going to be if SPX sold off from 6,100 down to 5,800, or triple Q sold off by 30% almost, and SPX sold off by 22%? You definitely would have said, where is Bitcoin now? 82,000. Okay, it'll be 60,000, right? Okay. Well, what did Bitcoin do? Yeah, on that swoon, we got maybe down to 78,000, and we didn't go any further. So what does that say? That says outperformance. That says there is an interest in that asset class, right? And when we're bouncing now, where is Bitcoin? 82,000 to 105,000 almost, right? So Bitcoin is actually the correlation between risk assets and Bitcoin is also kind of dying now, which is a good thing because I've been DCAing Bitcoin all year, every Monday, $100 worth. I have Bitcoin from 6 years ago. I hadn't done anything. I watched it go up and down and up and down. But now, with the proliferation of these Bitcoin EBTC ETFs, IBITs, and what MicroStrategy or Strategy is doing, I keep saying MicroStrategy, Michael Saylor is doing, I think Bitcoin has proven itself that it's not correlated to other risk assets to a certain degree, obviously, and it's responding even with the Fed lowering the balance sheet, okay, from 9 trillion to 6 trillion, even my M2 growth kind of subsiding, Bitcoin is doing its own thing. So that's a good thing. It's a good news if you're a holder of Bitcoin. I'm a huge believer in Bitcoin. I said this for the last 6 months on the channel. I think everybody's portfolio should have some Bitcoin or some surrogate of a Bitcoin, such as MicroStrategy or 2x ETFs or whatever. So, so that's where we're at. And last but not least, I would like nothing more than this new administration to succeed. Okay, because I've had some like trolls come at me. They go, "Oh, you're progressive." I'm like, no, I'm not. I actually voted for Trump, but what I'm seeing now is the message is not clear for me. Okay, and the scope and the size of the change that they're coming at with is a little too much. I don't think you can run the United States as a corporation. Okay, this is not Elon walking into Twitter with a sink and firing 7,000 out of the 10,000 employees. You can't do that with a government for a country of 360 million people. It just doesn't work like that. I hope and pray to God that they're successful in few things. One, we reduce this debt somehow, or at least we stop it from going up $1 trillion every 100 days. We're at 37 trillion people. Okay, this is not political, Democrat or Republican. The debt has been, national debt has been increasing, and now it's increasing by $1 trillion every 100 days. That's one. Number two, I hope the middle Americans can flourish under Trump for the fact that there are a lot of promises that they're going to bring back high-paying manufacturing jobs back to the U.S. I hope they can accomplish that. The problem I'm seeing with that is I think the horse is out of the barn. I don't think we can put the horse back in the barn. But I certainly would love to see that going back 20 years, 30 years, 40 years when we had solid manufacturing in this country, and then the economy turned into a service-based economy, spender economy. Okay, so I wish nothing more than that for the average American to benefit for all these manufacturing jobs to come back. Will they come back? I'm very doubtful that it will. And the third thing I would like to see is this news cycle to slow down a little bit. Okay, we had more gyrations, and what's happening is that liquidity is getting sucked out every time there's a tweet, every time there's a news announcement. We're getting this massive move up or down, right? The sensitivity of the market to the administration tweets or news is too much. I don't think we can do that either, because what's happening is that, trust to the markets is being lost. We cannot run or we cannot expect performance out of stocks, bonds, whatever we're going to buy if liquidity is sucked out, meaning not too many participants are there. They're just saying, I'd rather not deal with this, because it is very, very disabling, and you could get your face ripped off. I'm not complaining about me. I'll do whatever I need to do, but you could get your face ripped off if you're on the wrong side of this market, any which way you look at it. Okay, so the point is that news cycle needs to slow down a little bit. Cooler heads need to prevail. All this tariff thing needs to go away slowly but surely, and I think country is going to benefit from all that. So I'm looking forward to it. We had more action in the first 100 days of the Trump administration than we had I don't know how many election cycles that I've been through. So I wanted to get that out of my chest. Okay, so let's take a look at the chat. Good morning, Luis. Ernesto, good afternoon. Chance, I'd love to hear your thoughts on Pony AI. I have puts on Pony AI. I don't know what's going on with it. It's a pair trade for me, but I talked about it. Well, I'll talk about it a little bit today. Zavan is here. Good morning. Pony AI seems way too good to be true. Okay, then short this damn thing and then get blown out. Doug, what's up? Vic, good morning. Zavan, Pony coming back to Earth. Well, we'll take a look. It's just another trade. I know I keep saying that to you members and, subscribers, but I don't get too high or too low. I just try to keep it like emotions out of it. It's just another trade, man. You make money, you lose money at the end. If you look at your net lick, I call it, well, Tasty Trade calls it net lick. That's net liquidation value. It's on the upper left-hand corner on my screen on Think or Swim. You just look at that number. That's your scoreboard right there. You may have 50 positions in your account. Literally, okay? They're all getting marked to market every second of the day, literally, when the market's open, okay? And those in combination affect your net account worth. You just got to look at that. If that number is going the right direction from the lower left to the upper right, you're doing the right thing. Of course, with a little drawdowns here and there. It's not going to go straight. But that's what I look at. I don't really pay too much attention to anything other than that. So hello, still here, lurking in the background, collecting. Okay, yeah, okay, fine. There's nothing wrong with it. Cash is a position, Mojo, for sure. Wheeling for premium. Ah, you must be from TJ's channel. Bull trap, I don't know. We'll see. I have some put debit spreads. We'll talk about that in a minute. So let me put the link up if any of you wants to come on and then discuss anything you guys want to discuss. Here is the link for StreamYard. Just make sure you're in a quiet place with good internet reception so we don't get cut off. And here is that. If you guys want to come on, you're more than welcome to. So let's take a look. Because one of my members said Pony's coming down to earth. Okay, cool. Well, we're long Pony, but we're also WRD. That's also coming down to earth. But there is some weird things happening with these two, which I will explain in a minute. Let's take a look. Hope you guys can see the screen. So these are my positions. What do we have? I have EVgo. I bought 3,000 shares at 368, went to 415, didn't sell it. I'm going to hold it. I like this company. I will add to this if we get into the 340s. I'm going to definitely add to this. I have Google options that are lottery tickets that are about to go nowhere. How's Pony AI coming down? 1739. Oh, okay. It was 19. I guess it's coming down. Yeah. Well, the rug pull has not started there yet. So wait until the rug pull happens. When that rug pull happens, you will know. That thing will drop to 15 in about 3 minutes. And it may, and I don't know. So next position, SPX. I have the 5650, 5640 put debit spreads. I put them on about 310, 320 range. They're still about 340, 350 range. We're going to hold it. We're right at it. And I will add to it at some point. I trimmed my TLT position because rates are very stubborn. They're not coming down as I thought they would. So I trimmed the position from 25 lots to 20 lots. Still long. I'm still short the March 2026 85 puts, long the 95 calls, and short the 110 calls. All same series. Opened the position on a WeRide. It's a Chinese, so is Pony AI, by the way. It's a Chinese autonomous vehicle manufacturer. Uber just made a deal with them for $100 million in 15 cities. NVIDIA has an investment in it. It's been dead, but we'll look through the charts when we go there. So I purchased 3,500 shares, average cost $750. We're about 805. I sold, I'm trying to sell 7.5 puts. I had sold originally the 5 puts when the stock went up from 6.5 to 9.5 range. Those ate it, and I covered them, and I'm rolling them up to the June 7.5 now. I'm trying to sell more today at 1.5. If we get there, we get there. But for the shares that I purchased, I sold cover calls, I sold some 10 calls, and I sold some 12.5 calls. I'd be very happy with this. If the stock is here, everything expires worthless, I'll redo it again. It turns out to be, if everything expires worthless, it's about a 25% gain for a month. If it doesn't, I get called away. It's about 50-60% gain. So I'm all good. And I'm willing to purchase more shares at 6, which happens to be the 52-week low in the stock. So Pony AI and WRD WeRide are in the same business. Pony AI at this current market valuation is about $6 billion. And WeRide, with all the good news it had, it did rally a little bit, but nothing like Pony AI. Pony AI was $4 about 2.5, 3 weeks ago. We hit almost 20 today, $19.20 high. And yeah, that's what happens when shorts short, and then they get caught and they covered the next day, and then they short it again, they cover again, and then that's what happens. And I bought puts. I'm long 40 of the June 15 puts. I may sell some, do a little bit of arbitrage and sell some May 16 expiration 15s or 12.5 against it, which I had done with Uber. If you're following me, by the way, I put my positions up every Monday, Wednesday, Friday for the subscribers on the community page of the YouTube channel. And yeah, those are the positions. I'm still about 65-70% cash. Always keep cash. And I will definitely look to add to my put debit spreads. I had them. I actually had a loss on them. I came back to even. Closed those. Closed some of them. I had 5,600, 5,575 put debit spreads. I closed those with a profit. If you go look at the community page, you'll see where all the transactions are. Yeah, that's where we are. Again, a lot of people they all get excited and nervous or whatever. Look, if you're not doing everything I am doing, you're not going to get my returns. And if you do one that's a loser, you're going to end up losing money. And then I have to say this now, it's not financial or trading advice. You have to do your own due diligence. What I do is very risky. And it's not for everyone. It's probably for 10% of the population. If you don't have the education or the understanding of what I'm doing, don't follow me. Don't do it. You're going to lose money. And I don't intend to lose money. But then I'm quick enough and I can pay attention close enough for me to get in and out of things when they're not working out. So long story short, it's not financial or trading advice. Let's go to the front page. Let's see if you have any questions, and then I'll go through some charts, and then hopefully some of you would want to come on. Let's see. Good morning, everyone. SPY making a lower low. Not really. SPY is not making any lower lows, but Tesla is making a higher high today. It's about to break out. Bull trap? Could be, possibly. I don't know. Manny, good morning. What happened before you were against ZeroDT? No. See, Vic. Not against ZeroDT. I am saying I'm adding it to my toolbox. How am I doing that? I'm not working. I've subscribed to a company called Quant Data. They don't look at charts. They don't do any of that. They look at MVC, most valuable contract. They look at gamma exposure, delta exposure. I'm not doing it to gamble, Vic. I'm doing it with the sense of sensibility and trying to understand the importance of these things, right? Because what's happened is that the ZeroDTEs now, so figure out the dog. The dog is the animal, right? The tail is the tail. Well, in the old days, index was the dog, tail was the ZeroDTEs, and the dog wagged the tail. Okay. Now, so many of these things are being traded that the tail is wagging the dog now. You guys get it? Get the analogy? That's as good as I can come up with. And you have to pay attention to it. If there's 2-3 million of these things are trading every day, I have to pay attention to it. I'm not going to just be ignorant of the fact that they exist. Okay, that's one. Will you go long on Lyft? I can't trade Lyft or Uber. Well, I can, but I can't. I actually messaged David Risher after the earnings conference call that I listened to. Company's doing well. He's turning the company around. On pullbacks, I definitely would, but rideshare is a tough business. Although the trade long Lyft, short Uber would have worked out, but rideshare is still a tough business. One quarter doesn't make anything. Oh, I have a visitor. Hold on a second. I have a visitor I haven't seen for a while. Mr. Marcio, what's
the Prodigal Son is back.
I know, man. Marcio is one of my members, and he disappears. He becomes MIA for like a couple of weeks, 10 days. And then once in a while he shows up, shares his wisdom with us, and then he goes back again. I'm going like, not enough, man. We need more of you as opposed to less of you. So what's going on? How you doing?
One good news is that my business has really taken off. So
Right.
I have been absolutely swamped with work.
Good.
And I've been following the markets sporadically.
Okay.
And honest to goodness, I don't get it. I don't, everything I know about the bond market is telling me this is not great.
Yeah.
Everybody is short the long bond, short the short bond. Everybody's shorting bonds, and
Yeah.
We're going to all-time highs. I'm like, wait a second, the bond market is telling me something completely different.
Yeah.
And
By the way,
yesterday,
people, we did not talk each other today. We're wearing the same color shirt almost. So
we got the uniform.
yeah, we got
The funny thing is, I was very surprised yesterday with the TLT move,
Yeah.
and Powell saying, "I'm not going to ease up on bond purchases.
Yeah.
I'm not. We're not doing anything different than what we're doing now, and the market is just skyrocketing. Maybe earnings have been great and people are, everything is priced in, but I'm surprised. I'm really surprised.
Well,
I didn't expect it.
I think the bond market is definitely telling a different story. Gold market is telling a different story. The US dollar is telling a different story. All these things there's so many cross currents happening now. Literally, it's the first time in my career that I've had so many cross currents I have to deal with and make sense out of it. And sometimes you got to throw your hands up and say that this doesn't make sense, okay? Because no, markets are always right? So either the bond market is incorrect or the stock market is incorrect. They cannot be both right. So my concern is if we do break 5% on the 20-year, I think it's huge trouble for the stock market, huge trouble. But I can also see, Marcio, market took off, when the initial, we're talking to China news came out, right? How we took off. I can see the market being faded now on all these news. Like yesterday, right at the end, they faded it, they sold it. So all this news, that means it's getting priced in fully now, right? Unless tomorrow we have a picture of Xi having dim sum with Trump, we're not going any higher than here, because market has to go, okay, this tariff movie is over. We've gotten used to this. What else do we have now? So I think now they have to factor in macro, right? And I don't think markets factored in macro. Is the economy getting weaker? Although in your case, economy is getting stronger because you're busier than before. So, depends on what you do. But I think market's going to price in different things. But let
me make a quick comment about the economy getting weaker or stronger. So the reason why, my business does well is because companies cannot afford full-time me.
Yeah.
Right. They can afford part-time me, and I'm spreading myself into, multiple. For those who don't know, I'm a fractional CMO, right? I'm a chief marketing officer of multiple mid-sized companies. I used to be a marketing executive for a long time, and now I'm helping a few companies out. And the reason companies are coming to me, they're saying there's no professionals like you in the market that are willing to work on a fractional basis. Yeah. Now there are. So there's a lot of people like myself that are looking for this kind of work. So this is not, I'm just lucky because I have a decent network and people are coming after me, but honestly, it's not fantastic news by any stretch of imagination.
But Marcio, that is the move that's been happening in corporate America over the last, how many years, decade now, right? This gig work or side hustle, or correct. A lot of people like the flexibility and the freedom of all this, right? You don't have to be an Uber driver for that. You're talking like what you do, right? You could have flexibility and freedom, and you can, put yourself out as a consultant or whatever you may be to many different people. You don't have to hang your shingle in one spot for 20 years and get a gold watch and leave. In fact, your life will be in more balance, and you'll probably make as much, if not more money. And, and to me, you can, in most places, when you're working for a company, they don't know your worth, and you're shy to ask what you're worth. Now you can work with 10 companies, and 5 of them will know your worth and pay you on a part-time basis. And on part-time, you'll probably make more money than you would make working for corporate America. So
yeah,
a lot of people, a lot of professionals like yourself are figuring that out and doing what you're doing. So
I'll tell you the main advantage, I think, if you have any type of expertise. In your case, I think you figured that out some time ago. But for whoever, I think we have a pretty decent, Telegram group, and everybody else that watches your content. If you have any type of expertise, and companies are desperate for expertise, but they don't want to make a full-time investment, especially at the cost of hiring a full-time CMO.
Yeah.
The challenge I see, and when I made the change, I think it goes back to being, me being super conservative as a human being, right? Yeah. And not wanting to take the risk. But now it's been 2 months, right? I quit my job on Valentine's Day. It's been 2.5 months now. Yeah. And so far, great move. right? Let's see how we continue. But so far, great move, and the economy, just telling everybody what I see from companies and talking to people. A lot of uncertainty out there. A lot of uncertainty. Nobody is throwing parties, right? And I noticed in the tech industry, which is where I come from, one of the challenges that most companies are facing now is that funding has dried, right? Not a lot of people just throwing money at these companies like they were, 5 years ago.
Yeah.
And there have been probably almost 500,000 jobs eliminated in the tech industry. That's insane. These are high-paying, good jobs that vanished, right? So that will come to roost sometime. Right?
There's a lag. Obviously, there's a lag in all of this, right? And the market usually pays pretty good attention to the lag. Reads about 3, 6, 8 months ahead. I think market's having a very difficult time to figure out what are we having here. Are we having a slowdown? Are we going to have a recession? And the longer it neglects the slowdown or the recession possibility, the fiercer I think is going to be when it decides to price in a recession. Because I don't think markets anywhere near at the levels it should be if we're going in a recession. You know what I mean? We should be a lot lower than where we are today. So you know what? If you have time, why don't we go through the charts together today? Because
let's stay there.
I wanted to ask you about.
I have time to hang out a little bit today.
Okay, okay. So I wanted to ask you about the few charts, your thought process of it, and so you guys can see this, right? Okay. So I went through my positions already. I am going to go to the charts. Oh, I started buying puts on this thing called Pony AI. Have you seen that stock, Marcio?
Of course.
How do you like them apples? There's all. You know what? Let me go to the big chart so you all can see the madness that's going on. See?
Oh my God!
Do you see that thing?
Yes.
How beautiful is that? So I started buying puts, and the group was like, "Oh my God, the puts are going down." I'm like, "Okay, so that's like whatever." So they haven't seen these parabolic moves. Marcio, how do parabolic moves end? Do they end with tears or do they end with joy?
It's all you end with a group of bag holders.
That's what's going to happen. It may happen at 30 because some people were buying June 35 calls today. They opened June 35 calls on this thing, believe it or not. But anyway, so I bought some puts, and they're all like, "Oh, why are you buying puts?" Well, I'm like, "Okay, I can't explain everything. Once in a while, I just trade with my gut, and it works." But long story short, so I'm in a pairs trade, right? I'm going to explain that on the member group. So Pony and WRD are almost exactly the same company. Well, they do the same thing. So this is Pony.
Is it autonomous driving? Is that what the technology is? For
they're both autonomous driving companies. So Uber just put 100 million into WRD, which I'm long the shares and short the calls and short the puts and all that stuff. And Nvidia put in 25 million. That's when this crazy move happened, right? When Nvidia said, "Oh, we're going into WRD," it had gone public at 15. It went from 17 to 44 in a day. And then look what happened. So now I'm getting in around 6.5, 7 range, right about here. And Pony is the same thing, except it already did its deed. So, and Pony is definitely going to crash to some. So my pair trade is long WRD, short Pony. What do you say about that?
Well, so there's a couple of things that I want you to focus on. Number one, all the volume on Pony was around $15.
Yeah.
So at $15, that's, if you break that level, that trade is really thin until $5.
I wouldn't say 5, but maybe my goal is to get back to the 200 EMA, which is at 12. That's about it.
Oh my God, I look at this. I mean, the volume profile is so weird. It's every single share was traded around $15.
Yeah,
and so that level is absolutely key.
Yeah,
there's very little volume. That stock. So this type of trade is really interesting. When you have, so I don't know what the volume is on this underlying. The volume can't be too high.
It is very high. 50 million shares, 20 million shares.
Okay, so they're trading high volume. Okay, so
very high volume. It's a big company. It's a $6 billion market cap company.
Oh, no way! Wow. So
Yeah.
the I knew of the company just because I saw it on the high ticker alert on my filters that popped up.
Yeah.
And when I was looking at it, what worries me about this type of trade is it gets super crowded super quickly, and the profit taking is really aggressive. So you see, the profit start taking place and people come down. I'm actually surprised looking at the chart that it took a little while for them to reach this $4 low.
Yeah.
What were the news? Did you see what were the news that made it go up again?
No news. Same news. So this is just short covering on a daily basis.
Oh, you're okay. So you think there's a lot of short? Oh, okay,
yeah. Well, the other thing that's going to happen on this one, which I told the members group, but now I can tell the rest of you, is so there's a massive lockup coming up on Pony AI.
Also, so the executives are going to start. They'll be able to start selling their stuff.
Yeah. So on Pony AI, the lockup is May 23rd.
Got it.
So, and on WRD, which I'm long, the lockup happened on April 23rd already, right?
Okay, so whoever had to sell sold already.
Yeah. Do you see all this huge high volume here, right? So they're all like getting out. The stock is not going down, right? Right about here, it's trading maybe like 14, 15 million shares a day, right about here.
Yep.
That's exactly when the lockup expired on 4/23. Okay. So then I'm going like, okay, so this one. What?
That's good news.
We're done with the selling. So my point is I'm long WRD, short Pony. So either WRD is going to go up, do a Pony, or Pony is going to go down and meet WRD somewhere halfway or whatever. So that's the trade anyway.
Yeah. So I'm looking at the short interest for Pony.
It's fake. It's not real.
You don't think so?
No, that's Pony's being shorted every single day and being covered. If in fact I tried to short Pony
and you
on Think or Swim, you know what they were charging me for it?
Oh my God!
They were charging me for 400 shares. They were charging me $6.82 a day.
Jesus Christ!
That's how crowded the shorts are, and they're just getting blown out right and left, right? So I'm going like, okay, fine. But I'll take a stand. I bought some 15 puts. I think I may even have a profit on them already. But the point is, I'm thinking this is going to drop to maybe 10.5 to 12 range, and those puts will double, and that'll be the end of that story.
And you're thinking what time? What time frame? You're thinking what? June?
I bought June, so I'm okay.
Got it.
Yeah. Now time frame, it's going to be quick.
I'll throw my head in for some Junes.
Well, I mean, I bought them at like $3, $3.10, something. They're very expensive. They're 200 IV. I don't think you like buying things that are 200 IV.
No, I don't like. Maybe a debit spread, maybe a little debit.
Well, if it drops, what I may do is I may sell next week's 15s or 12.5s against my 15s, and then take my money out. Did you see my Uber trade that I put on the other day?
I did that Uber trade. That was you did a calendar, right? You ran a calendar on that.
Yeah, I ran a calendar, vertical calendar, and then sold the long puts, left the shorts alone for like an hour and a half, and they all went to a nickel, and that was the end of that story. So,
wow.
All right, so
good job. The trade pay for itself, right? That's really
you got to have confidence in what you're doing. A lot of people go like, "What are you doing?" I'm like, I don't know. I'm doing what I always do. Anyway, so this is the SPX. Let's look at SPX. So, do you like I hate drawing lines on my charts, Marcia. But even I had to draw lines now, and this looks to me like we are struggling up here.
Like we're a little flagging. We're flagging a little bit.
Yeah, we're a little toppy, a little double toppy, a little flaggy, into resistance, exactly back to Liberation Day levels. So all this happened for no reason, I guess. And I have some, put debit spreads, which I probably will add to at some point. But my thing is, do you think we're going to all-time highs this year?
I don't. I can't. I just can't. The bond's not telling me that. The bond market. I don't know. I'm scared. So I'm scared to say this is where my experience kills me. Knowing too much about macro has hurt me trading because I'm not a good trader, right? And when I look at the market, that 5,700 level has been lurking very, very much. Everybody's like, 5,700, 5,700. I can see us do a 5,700 break. If that break holds, there's an opportunity for us to get there. Earnings have been, really strong right now.
Yeah.
But we have this 5,700 level and 5,800 level. Those are the ones that.
Yeah, right up here. So 57.82 is the high here. So that's the next level of resistance. But somewhere here, either we're taking a break to breathe to make the all-time high run, or this little bull flag pennant kind of a thing that's developing here with this line up here. If we take that line out, I think we're going to go straight down to 5,100 again, retest it. But we'll see. We'll see what happens. That's SPX.
Let me tell you something. I was very surprised when we did this retest, maybe a week and a half ago, where we dropped to 5,100.
Yeah.
I thought we were going to get closer to 48. I really did.
But that showed the strength of the market, though, don't you think? That showed the strength of the market, right? So
I think at the end of the quarter, there's a lot of deposits coming in at the end of the quarter, and that. I mean, the amount of money coming into the market is always very strong at the end of the quarter. But I really thought that market looked really heavy those 3 or 4 days.
Yeah, it looked like a rollover. Yeah,
it looked a rollover completely, and it didn't roll over, right? It held.
Yeah. That shows the strength of the market. So about the other thing, by the way, on that, from that low of 48.35 to the Trump pump when they said, "Oh no, delay of the tariffs," right? Which is still in play, by the way. July 4th coming up, but that's the date, 90 days, right? So we rallied from 48.35 to 54.86. So that pullback that we had on that rollover lookalike was just about 50%. So, and then now we're here. So I'm thinking, well, we're clearly above the 20, clearly above the 50 now, struggling right at the 200. 57.80 is more resistant, but I think if we take out 5,800, I think we're going to go make new all-time highs. But I have a question for you, because I want to trade this thing. I don't know. I know you don't like it.
I don't like it.
Yeah,
I lost money for the first time at Tesla this year, and
but okay, so forget this is Tesla. This is XYZ. Okay. If you looked at this chart, what would you say? Just chart. Forget it's Tesla.
So you hold that 200. You go for it. You hold it. You hold it.
Well, we're above it today.
I would say the hold will be a couple of days to hold, because you're gonna see, But if it's the break and retest, right? So you hold what number is between 300 and 273? What's the 200 line?
200 line is right here. I mean, it was today that we went above it, 286 range.
Yeah, you wait until mid next week. That holds you go long. I mean,
okay. Well, I think I need to go long today, because I think they're going to pump this to 360 right about here.
You think there will be a pump? Yeah, I mean.
Yeah, I mean, look at this pattern. Look at this. Look at this cup. Look at this cup. Look at this handle. Look at this pattern.
It's a long. I mean, if I'm not looking at the underlying, I'm just looking at the chart. You cover the underlying, it's a long. I mean,
no, forget the underlying. There's no underlying. It's just so 50.
Really terrible about it's really terrible about Tesla is all you hear from a sales perspective, like everything that you would think to trade a stock, you just throw it out the window.
Yeah, you have to. You have to be agnostic to all the news. So MACD is going above zero, first time in about 5 months. We had this, all the bad news is out, earnings are out. Well, in that day was the key day for me. Well, earnings come out horrible, and then stock goes up, right? And then we go up from 220 to 300, flag ourselves. We're breaking the flag now. We broke the downtrend. We stuck there, pulled back to it a few times. 20 is going above the 50. This is a no-brainer trade. Should I trade TSLL, or should I just go buy?
No, I would say TSLL, just because any pump you double it, right?
Okay, so let's take a look at TSLL.
This is my thought process.
Here's TSLL. There's TSLL.
So let me tell you my trade, because I may put it on with you.
Okay.
The stop here, right? So if you're doing options, I would say be careful with that 272 level on Tesla. I would probably enter this trade on a synthetic using that 272 as a level to watch, because that would be my stop in the trade. That 272.
Okay, so we'll sell the 10 puts and buy the 15 calls, and then And this thing is going to go, because if Tesla, I'm thinking Tesla minimum is going to go to this resistance level right here.
Well, my target would be 327. That would be my target.
Okay, that's this low, but then the next is going to be 366. So we're going to go between 330 and 366. Let's make a round number 350. If Tesla goes 50 from here, that's $50. That's $15. 15%. So that means TSLL is going to go 30%. Is it 2x or 3x?
It's 2x.
Okay, so that means it's going to go 30%. 30%, 1153 is about 15. So
that $14 number there, that 1465 is like a perfect target for that trade.
That's the perfect. Okay, so then we'll go sell the puts and buy the calls. Okay, let's do that.
Well, let's do that now.
Let's do that now. Where are we going? Are we going May? And should we go May, June? Where are we going?
June. You gotta go. I like to give the trades time, so I'm scared of doing stuff in the same
let's take a look at the May. So May 10 puts are May next week. Let's gamble. No. I think it's going to be quick. I'm telling you. If the market's even sideways, I think this thing is gone. But the only thing I don't like today on Tesla is the volume. There's not enough volume. So 10 is 23 cents, 15. This is a wonderful trade right here. Sell the 10 puts May 16th and buy the 15 calls. We can do it for shit, man. We can do it for like a credit of like 12, 13 cents. Gamble.
Let me take a look at the
Gamble.
It's only money. Like, it's only money, right?
Just no, we're doing it with a credit. You buy, you sell the 10 puts.
I mean, you're okay owning the 10s? Are you okay owning the 10s, or we're rolling this thing now?
Tesla on TSLL by next Friday, yeah, stock is 1150. I'm willing to own it at 990.
No, that's true. I think I am so bad with timing. I prefer just to give it more time.
Okay, how much more time? Another week?
Maybe a little more than that. I'll probably
say.
Oh
my God, Marcio!
I'm horrible. You
paper hands, bro. Paper hands.
I'm going to default to you on the duration, because I think I usually give it much more time than I should.
Okay, so 10. Okay, next week, 2 weeks now. May 10 puts 45. May 5th, those are 26. We can do it at 20 cents. In 2 weeks, you own TSLL at $9.80.
That's not bad. That's not a bad trade.
Okay, that's that. Let's go one more week, because the paper hands need to go one more week. So I was like, everybody. Okay, this is as far as I go. I'm not going any further than this. I'm going to May 30th now. That's enough. That's enough time. I think that's too much time, but that's enough time.
So the 10s are 61.
61, 64, and the 15s are, there you go. 40 cents. Well, 26.40. We can get it off. We can get it off at 30 cents probably. Let's try it. Let's see. Let's buy the 64s. So, I mean, sell the 60, sell the 10s, and buy the 15s. Let's see where we're going to be.
What you're trying to get 250 on the pony fills? 250. And man, on a $15 stock, holy mother. That's
24-cent credit. 975. You own TSLL in 3 weeks if it doesn't work out, or you collect 25 cents. Let's see how much money we need to put up. We're going to put up for 5 lots. We're going to put up $1,750, and we're going to take in. We're going to take in $125.
Not bad.
Nothing happens in 3 weeks. You make 8% on your money in 3 weeks. If it's above, if it works for you, then we're talking boku bucks. You want to do those, or do you want to do?
I did it. I'm with you. I'm pushing the buttons right here.
What the fuck, man? Okay, 24 cents. How much credit did you do for it? Let me do 5 at 24 cents. If it pulls,
I did 24 cents. Yep, that's what I'm trying to get. It's trying to get filled now.
Okay, well, we're trying. All right, we got filled.
There you go.
Let's go another 5. We got to push it a little bit. Let's go. Still 24 cents. Let's put another 5 at 30 cents. If we get a pullback.
Let me see here.
And then, should we do every dime or should we do every nickel?
What's every nickel?
I mean, like 24 cents to 30 cents to 35.
No, you can Yeah, because it's a
I'm trying
small
to I'm trying to scale in. I don't want to. I want to do probably like 25, 30 of these things.
Well, I think what you should do is
Okay, I'll
scale
put in
in
5 more
daily.
at 30. I'll put in 5 more at 30.
Like wait a little more.
Okay.
You know, wait until tomorrow or not tomorrow,
Okay,
Monday.
sounds good. Okay. Well, I did it. I put it in. I put it in. I put it in. There's the. Where is it? Right here. And we added another position. My position screen is getting full now. Oh, look at my pony puts are break even already. That's good. I'm buying EVGO.
You're like crazy Johnny putting trades on.
Yeah. I'm buying EVGO. Are you buying EVGO with me or no?
Let me see EVGO. Ooh,
I love these
like
charts.
that. Back to the 200. That's an interesting one.
I love these charts, bro.
No, there's a good that pull, the tiny pullback to the 200. That's traditional break and retest. If you don't break that 200 level, it may take off.
I think it's
a gap fill. Ooh, interesting gap fill coming up. You see that level $5, like that $5.
Yeah, that's the double we're looking at. So somewhere around there here, right?
Yeah.
Yeah.
Okay.
So why did I buy it? By the way, why did I buy it? Earnings beat the shit out of earnings. So good catalyst, big up day. I got in about 365, 368, whatever. And it's kind of going sideways, doing this little bull flag thing with no volume. Next leg up, it's going to go. So I'm going to add a couple thousand.
Oh, you know what? That's a better trade than the Tesla trade.
Well, hopefully they all work out, but
Did they do well on earnings?
Yeah, that's the earnings right there.
Oh shoot! Let me
take
a look at that. That one's a.
You like that one?
I'm on that one like white on rice. Let me take a look at that EV.
They have options, by the way.
Yeah, I was gonna say the trade here. Let me see.
I'm just buying the stock, bro. I'm not gonna mess with options.
Yeah,
it's like an option. $3 is like an option, with no expiration. I mean, what am I doing?
It's cheap. It's cheap. That one is pretty cheap. Let me see where we are.
So MACD is going above zero first time since November of 2023. I think it's going to be a pretty good one. I would like for it to pull back to maybe 340, 350 range. I mean, really low risk trade here, to be honest with you. So
I'm looking at the chain right now. I'm trying to see if I can do a synthetic. Let's see options.
I'm just buying the stock.
No, because you know what it is. Because I lost a move. Right, you bought it at the right time. I'm off the move already. So
why? You didn't lose anything. What are you talking about?
No, but where did you buy your shares?
My average, my 3,000 shares is 366, where I'm exactly where it's at. Oh, and then after that, it went to like 420, and then it's pulling back now. So I'm like, okay, whatever. I mean, I'm even at the moment, but I want a little bit more of a pullback to buy a couple thousand more shares. That's what I want to do. And I'm still low. I trimmed a little bit of my TLT, by the way, so I'm down to 20 from 25. Still profitable. Still have $533 profit on the fucking thing.
I made some money on mine.
Okay, I was zero. I was up 5K, then went back to even, and would bounce a little bit here. I took like a few dollars in profits. I let 5K profits go, Marcio. It's not good. So,
I think again, paper hands Marcio here. I see 5K on my screen. I see 5K on my screen. I'm taking it.
I exactly had 5K, and I was like, maybe I should trim it. I go, no, it's going to be 10K tomorrow. Of course not. And then but then one thing I will never do. I will never let a green go to red. And we got to even, and then bounce. So I was up maybe like 1,400 yesterday, and then it sold off. Still up $500-600, but I don't know. Oh, let's look at TLT. There is TLT right there. Look at that thing. Does that look like a head and shoulder top that's about to fucking die or what?
Yeah, that's just. I mean,
that's nerve-wracking, man.
I was so surprised. I'm not joking. I was so surprised.
This move right here, right? This move from 94 to 85. Yeah.
Yep.
This one right here.
That's not normal. That is.
No, that is definitely not normal. Not normal.
Especially for bond stuff, like that's just ridiculous. And
well, the only saving grace is always this one. I mean, we're back to 2002, 2003.
Nothing. Yeah, you're back to nothing. You're back to nothing.
I mean,
I just don't understand that move, honestly speaking.
You know, somebody the other day, a friend of mine, argued with me about a topic. Let's see what your idea is. Starting 2021 or 2020, late to mid 2020, for 5 years now, in stocks and bonds, it's been the lost decade. Do you agree or disagree?
For bonds, for sure.
Yeah. How about
For
stocks?
bonds. No.
No?
What do you mean?
SPX.
From what day to what day? What day to what day? Let's talk about what day.
Well, let's take a look. Let's take a look. Let's take a look. 10-year weekly. Okay. So do you know at 4,800 on SPX, right?
Yep.
We were at the top of 2021 price. You know that, right?
Oh, for sure. No,
so we go back to 4,800, 4,500. You know, if we get a recession, that's
we're done. Of course. What I think is the way I trade long term is, you know, once, especially on my 401k account, once we cross the 200, I usually sell stuff and hold. And then when it crosses back over, like right now, if you look at your chart, right, the 200 is the blue line, I presume.
Yeah.
Yeah,
so the 200 is on this is the weekly chart I'm looking at. The 200 is red line.
So do daily for a sec.
Daily? No, daily. Hold on. Well, how long daily? 1 year, 3 year? Let's go 3 years.
Like 5 years. So whatever you can get quickly. So
I can get quickly 1 year, 1 day, 3 year, right there.
Yeah. So on my 401k account, if we cross the 200 on the downside,
which we did,
I bought stuff on my 401k account. I'm waiting to cross the 200 right now. I got mostly cash on my account.
We're right there. Then another discussion I had, or this turned into a debate actually, was with a Tesla disciple. I go, you know, Tesla is exactly where it was 4 years ago, right? They go like, no bullshit. It split and did all this and did all that. I'm like, are you smoking crack, bro?
No, that one we know it is. Yeah, they went for like $400 or nothing. Yeah.
They argued with me. They said, no, Tesla has like had a split 10 for 1. I go, what does the fuck has split has to do with any of this thing?
The chart reflects that.
You're retarded or what? There's Tesla. Okay, this is October 2021, $300, and there's Tesla today. April, May 2025, still $300. And people go like, no, it's so much higher. I'm like, bro, it's dead money for 10 years. What are you talking about? Like, I mean, I think
the impression is that they see, you know, oh, Tesla is you know, stock is skyrocketing. No, but it came down super aggressively, right?
I mean, I'm telling you, if you bought Tesla at $200, $300 4 years ago, you're even.
You're even. No,
you were up big at 400, or you were on, and then we saw go down to 100, if you remember that one, right? I mean, but you're still even. I mean, what's the point of like the shares? Companies.
Let's talk about that for a second. So I think number one, that speaks loudly of people having to manage their accounts, right? Yeah. I think when I understand the buy and hold. But you shouldn't buy and hold on stocks. You should, if you want to buy and hold, you buy and hold on ETFs. You buy and hold SPY, you buy and hold QQQ, you buy and hold any type of index. But buying and hold stocks, you get into a situation. Intel, look at Intel. Intel is the worst. If you think about a stock,
how about Nike?
Absolute dog. Like if you don't trade it, like let's pretend you love Intel. I used to work for VMware many years ago. Yeah. And the CEO of VMware was Pat Gelsinger. He became the CEO of Intel. That's an amazing CEO. Amazing. He's a good guy. Really amazing. Couldn't turn that company around, got fired. Yeah. Look at Intel.
No,
go bigger. Go bigger. Intel, you can go 20 years. Go 20 years.
Look at Nike. Look at Nike.
Oh, Nike for sure.
Right.
I'm a bag holder right now. I'm holding the bag on Nike.
Okay, you know what when I told the group the other day? I don't think you were there on the members live, and I've been saying this on the chat too. You know, I go, stocks are to be bought and sold.
Correct.
once in a generation, you run into a Palantir, you run into an NVIDIA. Maybe you can hold it for a few years, but even those need to be sold. You know what I'm saying?
Agreed.
Maybe you hold it for 4 years, but you can't hold a stock like the old days. For 30 years. There's like Coca-Cola, let's say, right? I mean, look, see what I mean? Slow and steady. You can be holding this for the next 30 years. It'll be fine. But you're not going to get your bangers out of it. You're not going to get your 3, 4, 5, 6x. When somebody goes 3, 4, 5, 6x, I don't know what the expectation is. Like, it's going to go up another 5x, 10x?
Well,
I don't know.
think about NVIDIA. Think about NVIDIA, right?
Well,
NVIDIA
yeah.
is, I think NVIDIA is the one that you can point out to. Look at that curl.
That's 10 years. That's literally going back to 2016, July of 2016. That's 10 years, right?
So I think what I tell people when they ask me for advice, you buy and hold indexes because you're betting on the market.
Yes.
But if you're going to buy and hold shares, like if you get a stock, for example,
yeah.
if you bought NVIDIA, like I used to be very close to the NVIDIA team in like 2015, 2016.
Yeah.
I didn't believe in the company. I was absolutely wrong.
Yeah.
But they were doing really good things. If you bought it in 2016 and you made $1 gazillion,
yeah.
At one point you need to make a decision, like, when do I get out?
Well,
right?
Okay, so the point I'm trying to make is I said this all the time. You'll probably agree with this. In every company's history, there is a growth curve that's happening, right?
Of course.
It happened with Starbucks, it happened with Nike, it happened with all these companies, right? It's happening with Palantir, it happened with NVIDIA. If you buy today, there are knuckleheads out there. They go, oh yeah, it's generational, buy at $100. Do you think NVIDIA is going to go to $500 a share? There's no goddamn chance that's going to happen. Okay,
and it may, but I think
you won't.
But the question. So this is my thought process here. Anything can happen. Is it likely to happen? Right. I think the biggest example of this.
Yes, that's true. Anything can happen.
So let me give you the perfect example. If you look at Microsoft.
Yeah.
When I worked at Microsoft in the early 2010s,
it was Microsoft for 10 years.
Microsoft was trading at $34 when I was a Microsoft employee, and once Satya Nadella took over, it became a juggernaut. Right.
There's Microsoft. Okay, there's Microsoft going back to 1986, 40 years.
Correct. So I look how dead it was for how many years. It was just kind of a dog.
Okay, Microsoft hit a high of 55 in 1999. 1999. And Microsoft did not see 55 again. Now this time on its way up until 2000. I can't even see the fucking date.
It's
2004, 2014. Sorry.
14. Yeah. So I worked at Microsoft. Go back a few years to 2010.
Right here.
Yep. Look at the dog. It's
26, 30, 28, 30.
It was a dog. The stock was a dog. Satya took over, and then the company went crazy.
Well, not just Satya. Other things happened. The internet really, second coming of internet happened. All these other things. AWS happened, and cloud happened, and all these things, because Microsoft did not do this with selling works or.
I understand, but let me explain. I mean, just the macro environment for technology was very different, right? So the reason why I mentioned Microsoft is that you have a company like Intel, who is an amazing company, deeply profitable, amazing business.
Yeah,
right?
Here's Intel.
And then you say to yourself,
there you go.
I'm gonna pick. It's wonderful to look at the Microsoft chart, and you invested and you make $1 gazillion. Cisco's a disaster. Intel's a disaster. Look at Cisco in 2082. Yeah. It has never. You could have your money at Cisco for 25 years.
Yeah.
And so lesson number one, really hard to pick the bottom, pick the top. Lesson number two, if you're a stock picker, you got to be a really good one, because you have to hit on a Microsoft, you have to hit on an NVIDIA. A lot of the stocks just kind of go up and down, up and down. I really like, if you want to hold long term, I really like DV stocks, because DV stocks, you have the exponential compounding of having the DV. Yeah. But companies like Palantir, like, what guarantees me that this is going to continue skyrocketing, right?
No, I mean, look, all I'm saying is you agree. We agreeing. So on Microsoft, right? You had dead money. You had dead money in your pocket for 16 years.
Absolutely.
Okay, and then it works. My thing again, but it had an initial growth phase. You remember the 2000 .com bubble and all that good stuff,
Yeah,
right?
of course.
Microsoft went from $7 to $50. There is your first growth phase, dead money for 15, 16, 17, whatever years, and then the second growth phase. I'm trying to explain to people that stocks are to be bought and sold. Now, if you bought Microsoft in 1986, okay,
You're a gazillionaire.
at
$1.
I don't know, at like $1.50, whatever the heck it is, right? Yeah, and look where we are today, right? So that's how many years is that? 1987, so 40 years.
Like 30, yeah, almost 40 years, yeah.
40 years, right? So yeah, you'll be a gazillionaire if you put $1,000 in Microsoft 40 years ago. And although you have to factor in the what was $1,000 in 87? What could $1,000 buy in 87 versus what it buys today? Because there's an inflation. But this Microsoft obviously has beaten inflation to a pulp, right? I mean, would you rather hold the cash or would you rather hold Microsoft? Obviously,
look at Amazon. You will see something on Amazon that's interesting. Amazon. After the dot-com crash, Amazon was $2. Right?
I bought it at $6. I bought Amazon at $6.
That now, let's talk about this for a second.
Yeah, and that one was a big mistake selling it at 12 for sure.
That's what I'm trying to explain to you. How many? If you don't see the chart ahead of you, right? How many people are going to be holding? Now, I understand that if you're not a trader and you are holding the stock, and what you have to have some criteria to get out if things are not working out. I made $1 gazillion on Apple. Like the Apple is, I think maybe I bought Apple in 2018.
Yeah,
when they had a really big dip, made like a pretty decent amount of money on Apple.
Yeah.
But the reason why, but I had criteria to get out. I'm like, look, it was super inflated. COVID got close to, the chart looked at, I always look at the 200 on a long-term chart and I say, it's time to get out. I hold the cash. It's okay. On my 401k, I did it. As soon as the 200 crossed, I'm like, we need to get out of this. Let's wait for the market to settle down. And it was a good move. And it's always been a good move. That's the one that I've always done on my 401k, and it's always been a good move for me. Yeah. Well, I agree with you. I agree with you. Sometimes I understand that buying and holding, fantastic. Keep adding the money, etc. If you're not watching anything, buy good DV stocks. Coca-Cola is an example. Because it compounds and the growth compounds, and that's always.
That's why Warren Buffett did what they did. For those 20, 30 years, right? And ultimately he ended up getting into Apple. And there is a very interesting tweet about his portfolio doing as well as it did with Apple or without Apple. Without Apple, he would have underperformed. So my thing is, look, I want to trade. I want to make 100% of my money. If I'm not doing, my trading money, not investment money, but if I'm just at the benchmark with my trading, there's no reason for me to trade whatsoever.
No, all the time that you're investing, of course.
Yeah. So if I don't do a minimum of double of the benchmark every year, then no reason for me to waste any time on any of this, right? But now if you do double, triple, then okay, then it's worth it. And that's a small part of your life anyway. It's just having some fun doing whatever you're doing. But I do understand when people say, I don't have the time, I'll just buy and hold. But then I go, make sure what you're buying and holding is holdable for 25 years. Like when they tell me about Palantir, okay, great. It's gone from 7 to 125. And, the Tesla, same thing, right? I'm like, buyer beware. Stocks are to be bought and sold. And it's not to be this, generational buys come once in a generation. That's why they're called generational.
And I think trying to catch those is difficult, right? I think
But I think they're also very simple, Marcio. Like I keep saying the same thing because I remember Starbucks, right? When they were just opening stores, right? And you knew this thing was blowing up. You knew the growth curve is there. And that's why having that experience with Starbucks brought back memories while I was eating at Kava that day.
Kava. I agree with
And
you
I
on
was
Kava.
like, bro, they're gonna open 300 stores. The lines are out the door. I just want to play this growth phase. That's all I want to do. Same thing happened with Chipotle.
How expensive is Chipotle is ridiculously expensive. How expensive is Kava now?
Kava very expensive. Yeah, it's
I missed the
expensive.
ball on that one.
I
And
mean,
they don't have it in Florida.
I got back in at 82, 83, and in my investment account. So that purchase is almost 2.5x of my original purchase at 33, which I had sold in the 150s. And it got up to 175, which was like, this is not a tech stock. I'm like, I need to part with it. But when it did drop, I bought some. I sold some cash secured puts. They expire worthless, which is no big deal. But, you know, it's really not that hard to see what is happening like on a daily basis. If you go eat kava once a week and the lines at every kava store are out the door, you know the growth is there, you know they're opening new stores, you know the sales are there, and I'm going like, you don't need to be a technical analyst or fundamentalist or whatever the heck you are. You just, you know, buy and sell shit that you use every day, you know. I mean, we use Apple every day, our phones, we'll go to Costco every day, you know. So those are
the trade that I made that feels like the Kava trade is with Lululemon, right?
Yeah, there you go. There's another one. That's another one. I mean, look at the difference, right? Look at the difference, right? You have Nike as the star of stars, and then Nike dies for 15 years now, or 10 years. It's back to where it was 15 years ago. And if you look at Lululemon, same growth, same thing, same idea. You know, one store, two stores, lines out the door. People are buying $100 sweats and shit like that. And I'm going like, okay, This is going.
Well, I saw my wife, you know, I see my wife with Lululemon, and you know, everything she wears is, and there's a new company.
Yeah.
There's two new companies that we need to be paying attention in the athleisure, like, because obviously that's what I see every day here with my wife.
Okay.
One is called Alo. I think Alo is not public yet.
Yeah.
When they go public, it's going to blow up.
Yeah.
And there's another one called Vuori, and it's going to be exactly like Lululemon. If they go public, it's going to blow up.
Okay.
Because that's all we buy. Okay. The level, the Vuori, for example, the level of loyalty that women, you know, you never, like, they call the Karen stocks, right?
Yeah.
You don't want to mess with the Karen stock like Target. The only Karen stock that didn't do well was Target. Target went to bleep.
Yeah.
But they're denying the Karen.
Yeah.
They're denying the Karen trade.
No, but I think those are great points, which is finding these things. First of all, if it was left up to men, no retail will do well. Okay. I mean, they will all go bankrupt. I short the hell out of it if it was only men, right? But with the exception of Rolex, but Rolex is men and women anyway. So my point is, if it's clothing, right, you'll go bankrupt if you do men's clothing only. Now, if you do women's clothing and get this really loyal group of customers for you, like Lululemon did, because you know their shit is completely overpriced, right? I mean, like
for sure.
$150 for like a pair of tights. I'm like, come on, bro, what's happening here? But again, your point well taken. There's a growth phase. There's a shit that blows up, and then Lululemon dies, and then like these two newcomers will come around.
It's gonna come up and eat their lunch. Absolutely.
The cycle starts again. Like the other day, actually, it's funny you mentioned that. They're not public. They got just bought up. They were going to go public. Private equity bought them. You know, in California and many other states. Maybe you have it in Florida. It's Dave's Hot Chicken. Do you guys have Dave's Hot?
Yeah, of course. They got bought out. I saw it. Yep.
Right. So Dave's Hot was started by 4 Armenian guys in a parking lot, gas station parking lot, 6 years ago in a food truck. Okay? They just got bought out by private equity, and they live in Glendale. They're bought out by private equity for $1 billion.
Holy mother.
$1 billion.
Jesus Christ.
Think of what I mean. See? So all these things proves to me that the America, and we're going to finish on a positive note, U.S. is the best
Oh,
of the
best
best.
country in the world. Let's
Of
not.
the
Let's
best.
get it straight. Get it
Stop
straight.
bitching and moaning about shit is wrong. Shut the fuck up. There's nothing wrong.
If there's no other place on earth that all this crazy stuff happens, and I tell people all the time, obviously you have Armenian, you're Turkish, but you have Armenian descent.
No, I'm Armenian. I'm not Turkish. I was born in Turkey. I'm full on Armenian.
Well,
I'm
anyhow,
yeah, I'm
first gen Armenian, born in Turkey.
yeah.
I was born in Brazil. I came
Yeah.
here very young,
Yeah.
right, to go to college.
Yeah.
And I tell people all the time, do not mess with us.
Yeah,
this is the best country. No other place on earth you can make food on a food truck, and then 6 years later you have $1 billion in your bank account. It's just
exactly. That's not gonna work. You sell a piece of fucking chicken breast dipped in some hot sauce or whatever. I love Dave's hot. I mean, but my point is,
I've been there too.
Yeah, people underestimate, and because they have it so good here, they complain.
Oh, I think so.
Stop complaining, man. The other day, I usually don't go to the bank. Okay, I'll finish with that. I was at the bank. There's this lady in front of me. She's on the phone with her husband or whatever there was. I'm listening. I'm just eavesdropping because I got nothing else to do. I'm just waiting in line to get a cashier check or some shit, whatever it was. Long story short, she goes, "But the internet is so slow."
Oh, damn.
I'm going like, I'm gonna smack her, bro. I go, you know what, lady? I'm gonna pay for your plane ticket to Ukraine. Okay? I go, let's see if you survive there for like 3 hours. 3 hours. No, not days. She'll be dead. 3 hours. and I'm going like, these people need to travel. These people need to figure this out, that this is the best of the best of the best. You can do it in other countries. You can do it in Russia, but you have to split it with Putin. You can do it in China. You have to split it with Xi. You can do it in Germany. It's like 60%, 70% tax. You can do it other places. There are other, like Sweden, right? The IKEA people, right? Multi-billionaires, whatever. What I'm saying is that the chances of you doing it here is a lot higher than anywhere else.
I tell people all the time, I am the American dream, right? I came here, go to school, had a family, became an executive, and there's a kind of a recipe. Like, I learned very quickly: go to school, do your work hard, don't bitch and moan. Like, I really learned that very quickly.
Yeah.
And I don't think, even with I fortunately didn't have a poor upbringing. My family was not poor, right, in Brazil, but things are easier here. That's for sure. And
no question about it.
Do we have issues? Absolutely. Are we still the best? Absolutely.
Yeah, right? Without a question. And, well, my man, good to see you.
Good to see you too.
We traded the same thing together, so there we go.
Absolutely.
And then we're waiting for a pullback to add to it. So people, there you go. I will post my positions on the community page today. Don't keep asking me why this, why that. I mean, I do what I do, and sometimes it works, sometimes it doesn't. Most of the time, I have a good idea what I'm doing. And there's a time to press, and there's a time to play defense, and this is the time to kind of press, not full on press, but some kind of press. But so there you go. You have an EV go now. You got to go look at it, and I think it'll be a good trade. I think we'll get a double out of that, hopefully, but we'll see.
You're the best. Say hi to everybody on the chat. I'll try to make some time this week, but it was awesome talking to you.
Well, thank you, man.
Bye, guys.
Be well. Keep it up. All right, people. We're done. Any other questions? Anybody else? We did the charts. Well, we can go back to the positions again. One last time. Oh, ponies rallying. How do you like them apples? It looked like it was cracking. Well, it's not. That's okay. What do we have here? Do we add more? EVGO? Yeah, we're definitely going to add more EVGO at some point. And we're going to add some TSLL. So what do we do on TSLL? May 30th, sold the 10 puts on TSLL, bought the 15 calls. We're going to add it again a little bit more. And SPX at 56.61. We have 56.50, 56.40 put debit spreads. Yeah, that's where we are. So with that said, much love. All right, Doug, be well. Vic, adios. I'm gonna say goodbye to you all. Have a great weekend. Mother's Day. Go give your mother a kiss. And it is Mother's Day on Sunday. Go give your mother a kiss and stay healthy, and see you guys on Monday for Trading with Sergio. Bye now.